XRP just hit $2.39 as of October 23rd, 2025. And what's happening behind the scenes with whale wallets is absolutely insane. While retail traders are panicking about a potential correction, SEC documents just revealed Ripple is about to lock up over 126 million XRP tokens, and Wall Street firms are lining up with 13 active ETF applications that could send this thing parabolic. But here's the twist. Nobody's talking about the on-chain data is screaming something completely different than what the price action shows. Stick around, because what I found in the whale wallet movements could change everything you think you know about XRP's next move. All right, let's cut through the noise and look at what's actually happening with XRP today. As of 8:12 a.m. Eastern on October 23rd, 2025, XRP is trading at $2.39 with a market cap sitting at $144 billion. Now, that might sound solid, but here's where it gets interesting. XRP fell 1.17% in the last 24 hours, actually underperforming the broader crypto market despite increased trading volume. The token is stuck in a tight range between 2.33 and 2.44, and traders are watching this consolidation like hawks, because historically, when XRP compresses like this, volatility breaks happen fast and hard. We're talking about a coiling spring that's ready to explode in one direction or another. But look, the price action is only part of the story. What's really fascinating is the disconnect between what's happening on chain versus what we're seeing on the charts. Here's something that dropped today that should be making way more headlines. SEC documents just confirmed that Ripple is handing over 126,191,458 XRP tokens to be locked and traded for company shares. Let me break down why this matters for your portfolio. This isn't some random corporate move. This is Ripple essentially taking a massive chunk of XRP supply off the market and converting it into equity. That's over 126 million tokens that won't be hitting exchanges anytime soon. Basic economics tells us what happens when you reduce circulating supply while demand stays constant or increases, price goes up. And speaking of regulatory news, we need to talk about where Ripple stands with the SEC, because this has been the elephant in the room for years. The SEC Ripple settlement finally closed in August 2025, giving XRP the legal clarity it desperately needed. This settlement removed the major regulatory cloud that's been hanging over XRP since 2020, and now XRP has similar legal standing to Ethereum in terms of regulatory clarity. Real talk, this is huge for institutional adoption. Wall Street doesn't touch assets with regulatory uncertainty. Now that the lawsuit is settled, the floodgates are opening. Now, let's talk about what could be the biggest catalyst for XRP in 2025. ETFs. As of September 25th, 2025, there are 13 active XRP ETF filings with the U.S. Securities and Exchange Commission. We're talking major players like asset management firms lining up to launch XRP exchange-traded funds. Here's where the math gets crazy. According to recent analysis, if XRP ETFs get approved and capture just half of what Bitcoin ETFs pulled in during 2025, we could see XRP prices absolutely skyrocket. Think about it. Bitcoin ETFs brought in billions of institutional capital. If XRP captures even a fraction of that flow with its 144 billion market cap, the percentage gains could be massive. Some analysts are throwing around a $5 price target if these ETFs get approved and institutional money starts flowing. Now, I'm not saying that's guaranteed. Crypto predictions are notoriously unreliable, but the setup is there. The regulatory clarity is there. The institutional interest is there. The question is timing. Okay, this is where things get really interesting and honestly a bit contradictory. Let's look at what the smart money is actually doing while everyone's focused on price. On-chain data from October 2025 shows that wallets holding 10,000 plus XRP hit an all-time high of 317 wallets. That's whale accumulation at levels we've never seen before. These aren't retail traders. These are entities with serious capital building positions. But here's the twist. There's also been significant whale selling pressure According to CryptoQuant data, a wave of large whale deposits to exchanges started on October 1st and continued until October 17th, with the peak happening on October 11th. When whales deposit to exchanges, that typically means they're preparing to sell. So what's the real story? Are whales accumulating or distributing? The answer is probably both. Some whales are taking profits after XRP's run up to the 2 out of 40 range, while other institutional players are using any dips to accumulate for the long-term ETF play. This is classic market behavior during consolidation phases. Recent reports show renewed whale activity even as XRP slumped to 2 at 40. The smart money isn't panicking, they're repositioning. Let me show you what the charts are telling us right now. XRP is maintaining an uptrend above $2.40, and technical analysts are eyeing a potential move to the $2.72 to $2.85 range if bulls can break through current resistance. That's roughly a 15-20% move from current levels, but we need to be honest about the risk too. Like the NVT ratio, that's network value to transactions, is spiking, and long-term holders have been selling. If XRP loses the 235 support level, analysts are warning we could see a correction down to $2.13. That's a potential 11% drop if support breaks. The daily trading volume slipped by nearly 16% recently, which shows some momentum is fading. Lower volume during consolidation can go either way. It could mean the market is waiting for a catalyst, or it could signal waning interest. Some optimistic analysts are even suggesting XRP could hit $3 before Halloween if the bullish scenario plays out, with estimates as high as 3.05 plus in the most aggressive forecasts. That would require a significant catalyst, though, probably ETF approval news or major partnership announcement. Here's something flying under the radar that shows Ripple's long-term vision. The company just spent $1 billion to acquire Hidden Road, a treasury management and prime brokerage firm. This isn't just about XRP, the token, anymore. Ripple is positioning itself as a major player in mainstream finance infrastructure. This acquisition shows Ripple is serious about bridging traditional finance with crypto. They're not just sitting back hoping XRP pumps. They're building real business infrastructure that generates revenue regardless of token price. That's the kind of move that gives me confidence in the long-term viability of the ecosystem. Let me lay out both sides, honestly, because if you're only hearing one perspective, you're not getting the full picture. Bull case, SEC lawsuit settled, regulatory clarity achieved, 13 active ETF applications that could bring institutional billions, whale wallets at all-time highs, showing accumulation 126 plus million XRP being locked up, reducing supply, technical setup showing potential for 2.72, $2.85 move, Ripple expanding into mainstream finance with billion-dollar acquisitions, legal standing now similar to Ethereum, bear case, recent whale deposits to exchanges, suggesting selling pressure, NVT ratio spiking, and long-term holders distributing trading volume down 16%, showing momentum fade. Tight consolidation could break downward to 2.13 if $2.35 support fails, underperforming broader crypto market despite positive news, ETF approvals not guaranteed, and timing uncertain. Look, I've been tracking XRP since the SEC lawsuit started back in 2020, and this is the most interesting setup I've seen in years. The regulatory overhang is finally gone. The infrastructure for institutional adoption is being built. The on-chain metrics show smart money accumulating. And this is important, we're in a consolidation phase right now. XRP is coiling between 233 and 2.44, and nobody knows which way it breaks. If you're already holding XRP, this might be a time to just sit tight and let the situation develop. If you're looking to enter, waiting for a clear break above $2.04, sort of a dip to 233, support might be the smarter play. The ETF situation is the wild card here. If even one or two of those 13 applications get approved, we could see a significant price reaction. But approval timelines are unpredictable, and the SEC doesn't move on anyone's schedule but their own. So here's where we are on October 23rd, 2025. XRP is trading at $2.39, stuck in consolidation while whales accumulate. Ripple locks up over 126 million tokens, and 13 ETF applications sit waiting for SEC decisions. The legal battle is over. The institutional infrastructure is being built. The question isn't if XRP will make a move, it's when and in which direction. Key takeaway, the next 30-60 days could be critical for XRP. Watch for ETF approval news, monitor that 235 support level, and pay attention to whale wallet movements. If we break above $2.44 with volume, the 2.72 to $2.85 range becomes the next target. If we lose 235, protect your downside. What to watch going forward? ETF approval announcements could happen anytime in Q4 2025. The 2.33, $2.44 consolidation range, which way does it break? Whale wallet activity and exchange flows. Any major Ripple partnership announcements. Bitcoin's price action, XRP, still correlates with broader crypto market. And look, this isn't financial advice. I'm just sharing what I'm seeing in the data and on-chain metrics. Do your own research. Only invest what you can afford to lose. Crypto is volatile as hell, and XRP has burned plenty of people who bought the top before. If you found this analysis helpful, smash that like button and subscribe, because I'll be tracking this XRP situation closely. Drop a comment below. Are you bullish or bearish on XRP right now? What's your price target for end of 2025? Next video, I'm breaking down the altcoin that's showing even crazier whale accumulation than XRP, and it's flying completely under the radar. You won't want to miss it.